I have with me now the Director of Metals Research at Societe Generale, David Wilson. $2,000, how does that sound to you?
I think it's not beyond the realms of possibility
Really?
now. The fact we've broken through 1800, I mean, 2000 is not too far of a stretch. I mean,
we're talking longer term though. I mean, it's not going to happen anytime soon, is it? I mean,
I wouldn't say not over the next few weeks, but maybe over the next 6 months. And I've been talking to some of our fund clients. They're now hinting at looking at it a much longer term of maybe even 3,000. So you know, people are thinking about significantly higher numbers.
Now, what is pushing gold higher at the moment? I know in a way the answer is very obvious, but is it a combination of all the different factors, or is, say, the euro debt crisis more of a worry than what's happening in the US?
I think it's been a rolling mixture of different factors. Obviously, the main one now is the euro debt crisis, and obviously, you know, we had the meeting between Merkel and Sarkozy on Tuesday, which didn't present anything new. I think left markets generally underwhelmed, and we saw that in equity markets, creating a lot more nervousness and a lot more positive sentiment towards gold. Gold playing its sort of usual risk hedge role.
No, we're also seeing a lot of pressure coming from China and from India, and also from people buying physical gold jewellery. I mean, how much does that play into this?
Well, I think it adds to the momentum for sure. I mean, we've generally seen a positive uptake of physical metal by the exchange-traded funds through this year. And the fact that increasingly jewellery buyers, I think, are buying gold jewellery for investment purposes as well. And what is quite interesting looking at China is last year platinum had been very popular for jewellery purposes, and we saw a lot of buying. But as gold prices continue to accelerate, we saw a switch round at the end of the year, beginning of this year, and a lot more momentum in terms of buying of gold jewellery in China. And quite clearly people are looking at it for its investment purposes rather than just jewellery purposes.
Right. Just on the subject of platinum, is that now looking undervalued compared to gold?
I mean, we've had a lot of questions about that over the last week when gold went outright above platinum. I think you have to look at it more logically and think that the drivers behind gold are very different from the drivers behind platinum. Platinum is really more of an industrial metal, and the main industrial end use, which is auto catalysts, is not looking particularly positive at the moment. So I think it's difficult to say that platinum is looking undervalued compared to gold.
Now, obviously, if you'd got into gold last year, you'd be very happy right now. If you haven't got into gold, is it too late? I mean, if we're really talking about it going up to $3,000, you know, clearly there's a buying opportunity. If you were looking to buy gold, would you buy it now, or do you think you might see a dip in this inexorable rise?
I think we'll see rises and dips. I mean, we had a dip after it reached 1800. I mean, the way gold typically behaves is there are sort of target levels, psychologically important levels. When those are reached, you tend to get a profit taking and a sell-off, and then new entry points. I think if we do see a $2,000 gold is a reasonable target in the next 6 to 12 months, then yes, there are still buying opportunities at current levels.
What might create one of those dips? I mean, if there was another round of QE in the US, for example, what would you anticipate that would do to the price of gold?
It's difficult to work through the iterations, because another round of QE is obviously also going to prompt greater concerns about inflationary pressure. Yes. And obviously gold is used as an inflation hedge as well. What else could cause a dip? Well, maybe if European politicians actually manage to get their acts together and come up with some reasonable policy solutions to the current difficulties we're facing. I don't see that as a likely scenario at the moment.
Indeed. Now we've had the Gold Council coming out and saying that actually they can't keep pace, production can't keep pace with demand. Things like that clearly also must fuel the price of gold and the desire for gold.
Well, yes, they do. I mean, traditionally, when you've looked at gold, most analysts would tell you, well, looking at fundamentals is not really so relevant, compared to looking at, say, base metals or even platinum and palladium.
Yes.
But as we've seen a growing demand for physical gold, whether in jewellery or whether for sort of, bar hoarding or coin hoarding, it clearly adds to the momentum, and the miners are struggling to keep up.
Okay, all very interesting stuff. David Wilson, thanks so much for coming in.
Thank you.